The US stock market continues to set the tone for equities worldwide. Can US exceptionalism continue? I think it will, which is why I have more than 2/3 of the fund invested there. It's the home of innovation, adaptability, repeatable and mission-critical growth. The US has 6 trillion-dollar companies. Europe has none. Yes, it's an expensive market, but expensive doesn't always mean overvalued. Quality, resilience, and a broad spread of future-proof companies means that this market will grow through volatile economic cycles. The other key trend is the outperformance and dominance of the Magnificent Seven. Does this press on? I'm not sure, but it's impossible to predict when. That's why our weighting in some of these names needs to be sized correctly.
European equities tend to have the most global focus of all the regional equity portfolios, by which I mean our revenues are not just European. We have lots of exposure to North America, to Asia and emerging markets. And therefore, among the key trends shaping demand for our companies, for our region, will be what's happening in China, what's happening in India, what's happening in the US, what's happening in Latin America, and of course, what's happening to interest rates and demand and inflation in each of those territories.
If we think about 2025 more specifically, I think Europe has got some challenges. I think the whole world has got some pretty difficult economic backdrop that we're going to have to navigate. And in that environment, it becomes even more important to be investing in companies that have true pricing power, that have control of their destiny even in difficult times. And that's something that's quite different to what we've seen over the last few years, where basically any company has been able to generate pretty good margins because there has been a constraint on supply. That constraint on supply has now largely disappeared, and true high-quality businesses, I think, are really going to stand out in the potentially very challenging environment that we see ahead of us in 2025.
Well, we are optimistic about the outlook for the UK equities in 2025. Notwithstanding recent budgetary issues and concerns, the broad economic picture looks okay to us. Economic growth is okay. Consumers are in a reasonable spot. Real wages are growing. Unemployment is still at a low level. The housing market is showing signs of transactions recovering. And inflation, one of those big problems of the last few years, is down to more manageable levels. And as a consequence, interest rates are starting to slowly come down from pretty high levels as well. So when we put all those things together, we feel pretty optimistic about the outlook. What's interesting, though, is that sentiment towards the UK is so depressed. It's been very, very negative for a number of years, and it remains the case today. So we're optimistic about the outlook for the economy and for the markets, and we hope that that sentiment starts to recover through 2025.
So our view is still fairly conservative on China, but I think what we're learning is that policymakers are no longer willing to allow the economy to weaken further. They said very clearly back in September, there was 1 week in particular where you had not just monetary policy announcements and interest rate cuts, but you also had new announcements of more government spending just a couple of days apart. And this was a more coordinated approach from Chinese policymakers than really we've seen over the past couple of years. And frankly, I think the fact that they've now sent the signal that they're willing to support their economy is what people should be paying more attention to than the specifics of the measures. So looking out into next year, the economy is still fragile and the real estate sector continues to be a major drag. But I think you shouldn't underestimate the potential for more fiscal stimulus to come through. And where we really would turn more positive is if we see that more targeted support for the consumer. I think it's worth keeping an open mind about how much of a recovery we could see in China, particularly if more fiscal stimulus follows through in the next few months.